Welcome back. Now, for the past 2 years, interest rates have been at their highest since 2009. And ahead of the Reserve Bank monetary policy's decision this afternoon, we'll speak to investment analysts about savers, investors being the biggest winners. Amid the high lending rate cycle, we now speak to portfolio manager at Novare Holdings Handré Retief about how consumers can also invest for more returns in the current economic environment. Very good afternoon to you, Andre. Thank you for joining us. Much anticipation this afternoon. Where do you think the policy decision is going to lie, and what kind of factors or drivers would have affected this particular decision?
Hello, Audrey. Thanks for having us. I mean, obviously, I think it's quite clear that this afternoon would most likely be a 25 bips cut. When we look at the FRA curve, meaning what's priced into the market, 1 year from now, it's almost about 1% priced in. So 25 today and about 75 bips more. And we think that a lot of this is driven by the ZAR, the USD ZAR, and obviously the oil price. I mean, we've got a lot of reprieve through some oil prices, and we think that the two-pot system as well is playing out in the favor of the consumer. So we do think that the average consumer needs a bit more help from the Reserve Bank. So we're looking forward for that rates to come down today.
Oh, absolutely. I mean, we've seen other forms of income with the reduction of fuel prices being another source of income, I suppose, for consumers looking forward to that. But there's been a lot of, debate, and everyone has an opinion about what's likely to happen today. But of course, there are patterns that experts like yourself then look at. But for the ordinary South African, what does a rate cut mean to them in terms of, their money flow in their households?
Yeah, I mean, if you look at the rate cut, in terms of savings for the average South African, it plays a big part in terms of their disposable income, but also their investment portfolio. So when you sit with an investment manager like ourselves, obviously we make some capital gain on the bonds. If it's not priced in, if it's already priced in, we already made the capital. But we also think that it's good for a lot of stocks in South Africa, like our retail stock, like I've just mentioned. I mean, we have quite big exposure to those type of stocks like the Pepcors and those type of stocks. We think we can actually benefit with the average consumer getting a rate cut, get him some extra disposable cash and just spending a bit. I mean, we haven't seen South Africans spend this last few years, and that was obviously partly due to the high rates and obviously a very slowish economy. And we think we're more or less in the inflection point where this is about to turn around.
SARB's commitment to managing expectations, particularly with the announcement today, and also just avoiding market shocks, how tough do you think that was a balance for them, particularly for the decision that we're expecting here today?
Yeah, I think SARB was quite clear. Every meeting was quite clear from the SARB. I mean, we've been actually very positive on the SARB, less positive on the Fed. I mean, the Fed has, in our opinion, been a bit more all around the place. But I mean, the SARB has been probably a bit dovish, and they have actually guided quite well in terms where they think neutral rate is. I mean, that's why we quite positive that it's going to be only 25. So, like I've said, when you look at the global reserve banks, we think SARB is quite up there in terms of their guidance and their communication.
And going forward, Andre, what kind of a rate-cutting cycle do you think lies ahead? Do you think it's going to be slow and steady, or are we likely to see a hard push later on?
No, we definitely think slow and steady, and there's various reasons for that. We do think that the uncertainty in the US, obviously, it's our opinion that you can't cut too fast. You can't run away from the Fed in the US, and we think there's some uncertainties in terms of tariffs. Is it going to be inflationary? Is it going to be too much and demand destructive, maybe? So we're yet to see what the new president-elect Donald Trump is going to do when he's into office. We obviously have quite a good idea if he's going to do what he says he's going to do. It can be quite influential on your emerging markets, and you've seen the dollar actually strengthen quite a lot since Donald Trump came into the office. So that's all the things that the SARB are looking for. We do think that me personally would love a 50 basis point, but we do think 25 should stay on the cards. We do think that the Fed perhaps made an error with their first cut of 50 basis points and not 25. So I think the best way now to play out is to do a shallow, give some guidance on not a steep, but just a shallow type of cutting cycle. And if things change from that, you can always turn up the speed or turn down the speed.
Perhaps pushing our luck there with a 50 basis point cut. We'll have to leave it there, Andre. Thank you so much for your insights. We certainly appreciate it. That's Andre. They're just giving us insights into what we can expect and what factors and drivers would have formed today's decision from the Monetary Policy Committee.